All right, good afternoon. Today is Tuesday, December 26th, 2023. Today I went 3 for 3, but I only took one of those trades on my actual account. The other two were just to try it. But I released a drawn liquidity video today, which I'm liking a lot. And the drawn liquidity was what took me the longest to figure out throughout my trading career, but it is by far probably the most important thing is understanding the draw of liquidity and being able to understand structure. But getting into it, the first trade that I took was a long, and I actually marked this up on Christmas. So yesterday, the 25th, so I marked up this little long 1 to 3.5 in this 3 hour fair value gap, which was in discount of, oh, okay, well, which was in discount of this original range. And it was also in line with this order block. And as you can see, price never came back below or never even closed a body below this order block, and that ended up running to all three TPs. So that was a good trade. And then getting into it, so this morning I came into the market. Where were we sitting? We were sitting right about here. So this morning I came into the market and I was really wanting longs because we had some nice. I saw on the 3 hour we had some nice highs up here, but my draw on liquidity video touched on this on how we kept building off of fair value gaps, pushing us to the upside, and we were also creating some order blocks along the way to continually push us up. So my bias was very bullish, and I really figured that we would get to this internal high and these two external highs. So jumping in, let's jump to a 1 hour. So on a 1 hour, we have this fair value, this little fair value gap down here in discount, which had not been tapped yet, but that would be a really good fair value gap since it is in discount of the range for price to come back down to this fair value gap in order to go higher, to collect orders in discount to go higher. So so price ends up coming down, tapping it, and that is, well, there's the 9 o'clock candle, but so we tap it and we continue to move up just like I figured we would. And then let's jump. Oh, data point unavailable. What? All right, well, let's go back to, we'll just go here. All right, so I'm still looking for longs, but a thing I want to touch on real quick with the importance of draw and liquidity is with no context and not being able to see anything to the left, this structure right here would almost look like the start of, or not the start, but a sell model, at least to me, but that is with no context and not taking account in where we have been. This would look like a sell model, but using bias and draw on liquidity, I figured that, hey, no, we are not going to continue selling, but rather go up and take out this internal high and the subsequent two external highs. So where are we at? 9:15. So market opens and we shoot up, but my trade that I took was actually right. Oh, all right, my trade that I had taken was right here. So this is not a trade. Let's see where we are. So here's our internal high, but this trade was not, there technically was not an entry for it, but I had still taken it because I felt very strong in my conviction that we would continue up. And also, too, when I entered, we created this 1 minute fair value gap, and my stop was a close below this 1 minute fair value gap. So I was figuring price opens, we move higher, come back down, sweep some liquidity, and then we continue higher, making a 1 minute fair value gap. And I entered around, oh, sorry, I do not want that. But I had entered around this order block here and took it to this internal high, which was my first partial, but I only had one contract as there technically was no setup, but I wasn't chasing. So price sweeps that liquidity for a nice little 1 to 2, and I am out there. And on another demo account, I was very curious, as this fair value gap had not been tapped, to take another long out of this fair value gap to the next high that had not been tapped, with my stop as a close below. And that, in that demo account, that trade ended up working to continue to the high. So that was all the trades that I took today. I took one long on my account, and it was kind of a chase as there was no real setup, but I was able to use draw on liquidity to form a bias, so I was pretty certain that we would continue to that high. But another thing I do want to highlight is I was really hoping we would sweep, or we could sweep these highs, but more so that we would create a 15-minute fair value gap and then use that fair value gap for longs for later in the session. And this was something that I had noted in my Discord today on a live call, that I wanted a 15-minute fair value gap to form or 5-minute fair value gap to form so we could take longs out of it. And sure enough, a 15-minute fair value gap did form. We bounce around and we do not sweep these farther external highs, which is good because that gives us high probability that we are still going to come back. So we come down, we tap into that 15-minute, and we continue to hold it, and price ends up running very beautifully to those highs. So now if that was to have been a trade, we could have marked it up as stop with a close below to the most recent high. There you go. You got a 1 to 2, but also we have a breaker here. And as you can see, none of the bodies close below the breaker. But 2, we can pop back in time and look if there was a possible entry for a buy model here. So sweep liquidity, tap fair value gap, and we displace up. But there's no fair value gaps in discount, and we end up coming down. So not any more trades that I would have taken. But one thing I like to stress a lot is don't forget to zoom out and check the higher time frames, because you would have gotten chopped up in here until market ended up making a move. But if you zoom out to the 15, boom, got a 15-minute fair value gap with a breaker. Is this fair value gap in discount? Let's see. This fair value gap is in discount. Nice. In line with that breaker, none of the bodies are closing below the breaker. 15-minute fair value gap is holding. And like I said before, boom, price goes up there and takes out the longs. But my overall bias for today was bullish, and that ended up playing out. And I would highly suggest you guys go check out my draw on liquidity video, as I believe that is going to be one of my most helpful ones, and that is what I find most traders struggle with. And once you master draw on liquidity and are able to form a good bias that can change based on market structure, you will be much more well equipped to be a consistently profitable trader. But that's all I got for you guys this afternoon. Link to the Discord is in the YouTube bio. But have a good rest of your night.